Hi guys, I hope you're sharp. And yeah, I just want to make a quick video on Nasdaq. And if you're new here, make sure that you subscribe and hit the bell icon, because this is where I share the my views on the structure of whatever chart that I share here. Usually I do VIX 75, Nasdaq, US 30, gold, and sometimes USD ZAR, right? So yeah, so if you are interested in learning how to trade using this style of trading, then you can just let me know in the comment section. So the last time we spoke about this one, remember the big guys, they always give us a hint as to like what is most likely gonna happen on a longer run. So on this year US 30, I mean US 100 or the Nasdaq, we've been talking about this area of support, and said the opposite one will be that area of resistance. So maybe the monthly is trying to move from this support to there, but we know that usually the price does not move in a straight line like that. We just play around, but maybe the ultimate goal is to reach here one monthly, but that's gonna take a couple of months to get there, if it really gets there. So that's all that you need to take from the monthly chart to say that we are bouncing from a monthly area of support. So it's very important for you to know where you are, so that you can decide if it's still safe for you to keep on searching for trades to go down or not. And in the previous video that we made, remember I was saying you can pick whichever area that you want here. You can pick this one, or you can pick this one. Doesn't change anything, you see. So it's totally up to you. So we can say that even the weekly, we said there were signs that, remember the weekly bearish trend line that we had was here. This was our weekly bearish trend line, right? And when you're marking the trend line, the price, it came here, remember, it touched what? The monthly support. Remember on monthly we saw the support, and even on weekly we have the weekly support. So that's why the price played it there for a couple of weeks, 3 weeks or so. And the opposite zone will be the resistance. Why? Because the price is coming from here, it seems to be gaining, so the opposite zone will be the resistance, and currently we hit that area of resistance. And remember when I made the previous video, when we did, I think in LA on Sunday when you're doing the overlook, I said there's a lot of if you're trading these bigger time frames, there's a lot of reasons why you would want to go long based on this, and even what you saw on monthly. Why? Because number one would be, we had this bullish engulfing, right? And we never came lower than it, so it is still active. And last week we had this bullish rejection candlestick, which is also still active because we never went lower than it. And that was, there's a lot. Even this one looks like a bullish engulfing. The bearish candlestick failed to engulf the previous one, so that's why the bullish engulfing is still active. Had this one engulfed it, it was going to invalidate that one, but it didn't engulf. It ended there. But the bullish engulfing, so we have like two bullish engulfing and one bullish rejection candlestick. So it's just, everything was just saying the bulls could come in, especially on a larger scale like week. But when you get the reason to buy, remember you need to know where the opposite structure is, so that you can exit your trade. So right now we are inside the weekly resistance. So if you were held in trades, you're supposed to exit here and maybe just leave one trade running should the price manage to break that. But you don't have to predict stuff like that. Why not take your profits, watch on the sidelines? If it gets broken, you'll search again for new trades. So remember I said this is a second attempt to break the trend line, because the last time we came here I said no, it seems like we're going to get rejection, and we did get rejection. And then now, based on all this engulfing and rejection candlestick, I said the price now has a second chance to break the trend line, and you can see that now we are having this candlestick that is fully outside the trend line. So this, when this closes, if it doesn't come back and touch the trend line, it's going to be a breakout. But after that breakout, maybe this is good, is very strong. So we'll just see what price happens, how it behaves there, because remember I'm telling you that the price does not move in a straight line. So that's all you need to take from this weekly, is that bullish, the bearish trend line is being broken, but at the same time opposite weekly resistance is being hit. So let's see how the price behaves there, because it might give us chances to go short just for pullback, maybe before, just to gather some strength so that it can defeat that resistance. So let's check what's happening on daily. On daily, when we were going down, the trend line was here, right? And I'm sure I've been mentioning this, I don't know how many times now. If you've been following this channel, you'd know I said this area of support is the one that gave us a move to the upside, and that move, this one, what did it do? It broke the trend line, right? But when it was moving up like that, it moved up and then it stopped and then it moved up again. So it was a market pause. There was a market pause here, which is also another interesting area here, which is this one. So what did this one do? After this pause, when we went up, we violated the area of resistance. So this one, I said, even in the past video and the one before that, I mentioned this, where I said this one here, it broke the trend line. This one here broke the resistance. Both of them are active. You can take trades from there. So look what the price did. When it came back, remember the first zone is here. It's here. The first zone. I said when you get resistance to go long there, you can go long. You can see all the signs, the rejection candlesticks, and then the price took off. And even when it's taking off, as much as we can say that the bulls had broken the trend line and the resistance, but you don't have to predict that it's just going to go straight like that. When it gets to the opposite area, just take your profits and just watch and see how it's going to behave there. If it gives you reasons to go short, you'll go short. But if it doesn't, then it means it's going to break the level. Then you can just identify an area where you can join that trend after breaking that. But in this case, it got rejected. But remember, a zone will always remain active until it is broken. But the more it is being tested, the weaker it gets. But just because it is becoming weak does not mean you should start predicting when it is going to be broken. No, don't go with that approach. It will be broken when the market wants to break it. Until that happens, now you're just going to be treating it as an active zone. So this one's the same case here, because we formed the zone there, we tested it for the first time, and then we came for the second time, we still got rejected, and we still had engulfing, and then from there the opposite zone will still be the same area, because of what the last time we were here we failed to go above, right? And look what the price did when it got there. The price did react to that area, but from there it engulfed and then all the way up, and then this nice zone here on daily, it's inside that weekly zone that we saw, where we said should the price give you any signs of reversal, you can try and take your chances, but you need to be careful with your stop loss, because of what weekly is very angry. But it's just that it hits this zone, but it's very angry. The pin bar, the engulfing, but we just gonna lean on the fact that the price does not move like that. It needs to breathe. You see, so when you're getting your sell, don't expect it to do this. It's not gonna be that long term. It's possible, but don't predict such. So I think that is all you need to take from. Yes, another thing is that this level has been holding as our level below. This was our level above. It's been violated. That's when you move up, search for a new level above. So that's your resistance. And now when the price was going up, it gave you a new level below, which means that level below you can remove it and only add the new one. The resistance will be that one. So this is the support, this is the resistance on your what do you call this, on your daily. And you can still put your trend line maybe somewhere there, and then that's your zone. Let's just see how the price is going to react to this. And tomorrow is Friday, so I don't like trading on Fridays, but let's just see how it's going to behave there. And then let's check H4. H4 has been in a very nice uptrend. The other day, remember we said the trend line was here, right? And we had this strong move to the downside that violated this, and then we said, should we get a reason to go short here, we'll go short, because remember it was still the old area above before it got broken, but the price never respected that. It just went all the way up without giving you any reason to go short. So that's where we missed it, but you only enter with confirmation. So now let's see the current trend line on H4 is there, and which means on H4, remember each time frame can have its own area above and area below. So you can maybe put your support here on H4, but trying to buy this is not safe because of what? This is H4, and the price, when it's coming to this zone, it will be coming back from that weekly and daily. So you can't try and fight those two with H4. Yes, the price can bounce, but we don't have to. So let's just play it safe. So what you can look out for you to say the price is really gonna, pull back from that weekly area of resistance and that daily area of resistance. You can mark it like that, and that's your H, and say this is my H4. This is my H4 bullish zone. I mean the trend line. Then you can just have this as your support. Maybe if the price was to, maybe tomorrow, if it can do something like this, even if it doesn't, it's fine. If maybe it breaks that, at least we know that from Monday we can maybe hope that it will pull back and give us, so that we can try and take it to the downside. And when we're taking it to the downside, I told you don't expect it to go all the way down. So until it violates the bullish structures, we are not going to take a sell. So when you're going down, you don't have to predict that it's going to go all the way down. Target that daily new area below this. Target this. And then just take your thing. That's if it gives you reasons to go short. So until it breaks those structures, let's check H1. Because honestly, currently there's nothing that's going to say to you sell. And tomorrow it's Friday. So hopefully if on that H4 it will come down, then you can say maybe from Monday I can catch it to the downside. You see, that's the only way you would sell. But we are looking for all of those selling stuff because we're saying what we are inside here. But it must first convince us, because the bears really, they don't have anything. So that's basically how you read the structure and end up coming with trade ideas and setups. So if you know these key areas, and then you will know where you should place your TP, or where you should be searching for trades and stuff like that. Then it's going to make things easier for you if you know how to analyze the structure. Just like the guys that I'm mentoring now, I'm always emphasizing on how to read the structure, because it's going to make it easier for you to come up with setups. All right, that's basically how you read the current structure on US 100. And yeah, good luck with searching for trades. Thank you. I'll see you in the next one.